Hi, you're listening to the Stefan Livera podcast, a show about Bitcoin and Austrian economics. Today, for episode 146, my guest is Will Cole, CPO of Unchained Capital, and we're talking about Bitcoin native financial services. But first, a word for the sponsors of the show. So, the Stefan Livera podcast is brought to you by Kraken, one of the world's leading Bitcoin exchanges. They're known for their focus on security with Kraken Security Labs, focusing not just on their own security, but also the security of their peers and other partners in the industry. Kraken offer a high-quality platform with high trading volume and low fees. They also offer 24/7 support, so it's easy to quickly sign up and get any questions answered if you've got them. Kraken recently released the Kraken Pro mobile app, delivering all the security and features you love about the Kraken exchange in a beautiful mobile-first design for advanced Bitcoin trading on the go. Kraken also offer an OTC desk for those seeking more private and personalized service for large block trades of 100,000 USD or more. Don't forget this Kraken margin up to 5 times and futures up to 50 times leverage. Go and sign up at kraken.com. This podcast is also brought to you by Unchained Capital. Unchained Capital is a Bitcoin financial services company empowering customers with financial freedom and control. Unchained Capital make use of multi-sig as a foundation in their service, and their approach to collaborative custody gives users some control over their private keys, while also giving you a financial partner and financial services. Unchained offer 2 of 3 multi-signature vaults. You can use Trezor and Ledger, and you can secure your Bitcoin for the long term using this option. And then if you want to get liquidity in USD, but you don't want to sell, you can use Unchained's collateralized loans, where you can put up some Bitcoin and receive USD liquidity. All that Bitcoin is stored on-chain in dedicated multi-sig addresses, and you can still hold 1 of 3 keys in that scenario. Make sure you check out Unchained's excellent series of content, such as Gradually Then Suddenly by Parker Lewis. They've also got a range of open source tools such as Caravan and Hermit. Go and sign up at unchained-capital.com. Next is the Cypher Wheel by CipherSafe at cyphersafe.io. If you've invested in a Bitcoin hardware wallet, are you also keeping that seed backed up? That comes in a BIP39 format, and so you need to back it up in a way that's fireproof, waterproof, rust-proof, pet-proof, and tamper-evident. Look into the Cypher Wheel. It comes in a wheel shape. It masks the words of your seed unless you open the padlock tamper-evident seal so that you know it's been opened. CipherSafe product is just going out now in early February. Go and order yours at cyphersafe.io. So for this episode, I recorded this one in person in Austin. I'm here at the Unchained Capital office, and I was chatting with Will. We spoke a little bit about learning about Bitcoin and Austrian economics. We spoke about Bitcoin meetups, getting ready for the bull run, Bitcoin and allodial title. We spoke about some of his work with Wyoming Blockchain, and also we spoke about Unchained Capital, vaults and loans, and this idea of Bitcoin as collateral. Here's the interview. Will, welcome to the show.
Stefan, good to be here. Thanks for having me.
Of course. So, Will, look, I know a bit about you, obviously, but just for the listeners, can you just tell us a little bit about yourself and how you got into all this?
Yeah. So, bit about myself here. I think that I've been my Bitcoin story, as it were, starts in 2011, and it's really all due to my older brother, Napoleon, who I think the earliest evidence I have in our email conversations is around April of 2011. Correct me if I'm, someone can correct me out there if I've said otherwise, but I think that's about right. And really, it starts in New York City, sitting on the 36th floor of an apartment that overlooked the Federal Reserve building. And so we are, in the throes of, hearing about QE and like the financial crisis and like, kind of getting out of it a little bit, but like we're seeing all the repercussions of the policies that have been happening. And we're sort of on the back end of, a tough election in the United States. And we start hearing about Bitcoin. And I had an economics background in college and then a technical background from being in a family of programmers. And so I felt like I had a lot of the sort of prerequisite ingredients to understand it early. Even with that, it took me a while after.
So on that, give us a little bit of background on your economics. Were you already an Austrian or were you learning about that as well?
In retrospect, I was a fake Austrian at that point.
Go on, what's a fake Austrian?
Well, I was an economics major in college and figured that there was just economics. I didn't know that there were multiple brands and theories out there. And I got a very classic Keynesian education and figured that was it. And it wasn't until around 2008 that I started learning that there was a little bit of different stuff. And it mostly came through Ron Paul groups, things like that. And I read a little bit of Hayek and I read a little bit of Rothbard and those types of things. And I thought I was pretty damn cool. And then it would have been, fast forward a little bit past 2011, past Bitcoin. I meet Saifedean. And I realized that's what a fake Austrian is that when I met him, I realized that I had not even begun to scratch the surface and I was a little bit of a phony. But that led me down another rabbit hole, made me appreciate even more and sort of strengthen my convictions and my knowledge, test myself a little bit. And has definitely been a fun journey outside of just Bitcoin.
Yeah. And I mean, it's a good point you make that many people come to learning Austrian economics even though they didn't learn economics at university. They just took it on and they're like a doctor or a lawyer, like Dr. Ron Paul, right? And then they just go and learn Austrian economics because they just find it makes so much more sense to them. So what was that experience like for you?
It was actually kind of disappointing in the sense that I felt like I had been robbed in my education. I found it odd that out of all those classes I took, after all those things I had learned, I'd never heard the name Mises, right?
Right.
4-year education. Never heard the name.
Yeah.
Didn't even know he existed. Now, that could be saying something about myself and my own intellectual curiosity and going out and making something of it myself. But it made me a little bit bitter. I was just like, what did I waste all that time and money for? It didn't really start there. I mean, it starts with, reading Hayek for the first time. It's very accessible, very, for at least for me, it was like a good introduction into the Austrian thought. And then, going beyond that into praxeology and like sort of understanding human action. That was, it was a long journey. It was a hell of a lot shorter than a 4-year education. But I guess at first I just felt let down. And then mixing that with Bitcoin and my tech background, it sort of changed me, changed my personality, changed my interests, made me kind of an obsessive person. And was definitely a fun journey to go down.
Yeah. And then so between you and your brother, Napoleon got it first, right? And then he got you into it?
Absolutely, yeah. Napoleon definitely, there's a world out there where there are very few people that have secrets. And I've thought about that. That's in, Peter Thiel's 0 to 1 book. He talks about, people that actually have secrets and building, knowledge and companies and off the basis of these secrets. I only know one person in my life that has real secrets, and that's my brother. And Bitcoin was one of those secrets that he brought to me, and it opened up a whole new world for me, a whole new obsession for, going on 10 years now, or 9 years now. Yeah.
Right. And we've also got to talk about the story with Parker, right? Now, Parker is also at Unchained, and he was at Unchained before you were. So let's hear a bit of that story. As I understand, you got Parker in.
Oh, yeah. I mean, Parker's Johnny come lately here. He's getting all the glory right now, because he's such a fabulous writer and such a, original first principles thinker. But, for a long time there, he's working at hedge funds, investment banks, not thinking about, the Austrian viewpoint at all. He was, I wouldn't say dismissive, but at least uninterested in my, many attempts throughout the, early teens to convert him into the Bitcoin world. But Parker and I we have like sort of this yearly tradition where we go skiing together, and our house is about an hour from the ski slopes. So we'd drive and listen to podcasts, and then we talk about them afterwards. And a lot of the podcasts that I was interested in listening to in 2014, 2015, 2016 were all about Bitcoin. And so he started to sort of catch on a little bit there. And I would say that I started the fire over a 3-year period there. And then, Safe was the closer.
That's right. And so now Saifedean was known in the gold world before, all this Bitcoin stuff. How did you get to meet Saifedean and get to know a little bit more about, that perspective on Bitcoin?
Yeah. It was, I can't remember the exact year. I think it was around 2015, actually. But it would have been through Pierre Richard and Michael Goldstein that I met Saifedean online. And, we talked about Bitcoin for the most part. And I knew that he was, of all of the people that I knew, he was the gold guy. And when Parker actually was working at a hedge fund and needed to do diligence on a gold company, we had connected him with Saifedean. I had opportunity to talk to him more. He started writing the Bitcoin standard. We did some notes back and forth. A lot of us did in his circle of friends. And but he was definitely someone who constantly was pushing my understanding of Bitcoin, why it mattered, what the eventuality of Bitcoin looked like by having a good basis and understanding of Austrian economics and the competition of monies and what makes good, sound, saleable, money.
Right. Yeah. And I think much of what is in the Bitcoin standard, there was a lot of hammering out of these ideas in, say, the 2012 and 2013 and 2014 times when people like, say, Conrad Graf or people like back then Tua de Meester, Peter Serter, and then obviously the Nakamoto Institute, right? So many of the articles that Daniel Krawisz, Michael Goldstein, and Pierre were writing, that I think many of those sort of helped form that understanding. And I think the Bitcoin standard is almost like a summation of many of those ideas, right?
Yeah, I think so. I would say that I see a lot of original thinking in there as well from Saif. I also see a little bit of Nick Szabo's, what is it?
Shelling out.
Shelling out, yeah, the origins of money story. I see a lot of that in it, and I'd been reading a lot of Szabo's stuff prior to meeting Saif, and so it definitely expanded upon those short blog posts and things that Szabo was putting out, and I found it extremely compelling, to say the least.
Yeah, and certainly, and not to take anything away from Saifedean, absolutely.
Yeah, of course.
The way he would spin it, or the way he would tell the story, was also very instructive for many of us, even though we had been thinking along similar lines at the time. And I think his particular focus, obviously, on stock to flow as well, which is probably the big. Not necessarily new contribution, but it was like he kind of took that idea from the gold world and applied it to Bitcoin in a way that just makes so much more sense. And now everyone's thinking about it, right?
The stock to flow part of the book, to me, is really funny because I remember reading it for the first time and thinking like, I never heard about that before. That's interesting. And sort of, passing it off and just going on to the next bit. But I remember it was probably a couple of years later, it's before Plan B, all that stuff. Thinking back on that and saying like, have I ever heard of this before? Or is there any prior? And I found a couple in the gold world, but it wasn't even a big deal in that world. I kind of think that got everything started here that we're going through over the past year and a half when it comes to understanding stock to flow, or thinking that we understand stock to flow. We'll see if we do. But yeah, that was a really interesting part of the book that at first I dismissed that is shown to be kind of prescient now.
Yeah, right. And I think the other thing with that is I saw inklings of that in some of Saifedean's prior work as well, because he was writing some blog posts and he would show things like, here's what the inflation rate is for US dollar versus gold versus Bitcoin. And then just like another way to frame that is just the stock to flow, right? It's just the inverse of the inflation rate.
Yeah.
And, from the person who's into Austrian economics and you're into Bitcoin and you're just seeing, well, look, the inflation rate for Bitcoin is just going to go so low. Yeah. It's just going to go so much lower than anything else in this world. That just has an appeal.
Yeah. Along with many other appeals, it's one of the things that, matters most about Bitcoin is that it is finite, that there will only ever be 21 million, and that that inflation schedule eventually reaches zero, and then it's zero forever. In fact, I would argue that, there are many things that have to combine to make Bitcoin great and interesting and probable to succeed, but if I had to pick one thing, it's that, right? It's that it is finite, it is, and that the inflation schedule gets to zero.
Right. Yeah. So look, let's talk a bit about some of the earlier days, like Bitcoin meetups.
Oh.
Right. So they've moved and shifted over time, and you've moved around a little bit as well. I think, as I understand, you were born and raised in Austin, but then you were living and working in New York as well. So can you tell us a little bit about how the Bitcoin meetup scene has been in that time?
Yeah, absolutely. It's great here in Austin today. When I first started learning about Bitcoin, it just looks so different. At least the groups that I was aware of at the time, BitDevs hadn't really started in New York, or if it had, I wasn't aware of it. It might have been much smaller. It was more politically based, right? It was very libertarian. It was, again, going back to the Ron Paul groups that were in New York. There was, the thing that people would talk about the most wasn't, a limited supply. It was censorship resistance, right? And that was the cool thing about it.
Right, buying drugs and whatever.
Yeah,
not that you should not do that, but that was the focus.
I was never buying drugs. I mean, I would never voluntarily trade my valuable Bitcoin for something like drugs. But you could tell that was kind of the ethos around it in New York at the time. When I started coming to Austin, you could start to see the fracturing happening. So I came in 2014, but I started visiting the meetups here late 2013, early 2014. You could start to see a little bit of the shit coining happening, a little bit of the fracture of, Bitcoin is special in these very, obvious ways versus we have the beginnings of this with blockchain, and we're going to build off of that. Blockchain, not Bitcoin. And you could see that fracturing happening. And by the time I got here in later 2014 and was involved in those there was, a split in the meetups. And it was kind of interesting to see how that happened, where you had, I guess, a more corporate focus of how do we capitalize on this, blockchain thing that's going nuts. And you had more of the technical and economic focus of, how do we make sure Bitcoin is, battle tested and resilient and understood really, and not get distracted by shiny things over here that don't really matter.
Right. Yeah. And so then there was a bit of a fracturing in the groups, and I guess you would say some of the groups were just really more focused on the technical aspects of it, right? Like just how does Bitcoin work at a technical level? And you can go and learn more. And this is, I've mentioned this before as well. I would love to have a Socratic seminar in Sydney, but we just don't have, we don't have that level yet. I'd love to get us there though.
Yeah.
Tell us about your experience going to some of those meetups.
Yeah, I mean, recently in Austin, Justin Moon has sort of kickstarted the BitDevs group here. Really, I think takes a lot from the BitDevs group in New York that's been wildly successful, doing the Socratic seminars, having the topics laid out, having a lot of experts that can talk to each topic. Austin has a huge wealth of technical talent, of business savvy around Bitcoin, and having those things meet here has been it's just very different from the early days where every day you showed up to a meetup and it was, who are the 10 new people that you need to explain what a UTXO is to them. Now that's okay. There's nothing wrong with that, but it's nice to see that some of these venues have advanced to where we can get into deeper and deeper topics, and, a place where someone who's been around for 9 years, thinking about this stuff can still learn more and humble themselves and figure out that they're not as smart as they thought they were, like myself.
Right. Yeah. And that's certainly, if you're not a developer yourself, it can be intimidating, but at the same time, it's if you just go there and just soak up the knowledge, it's incredible.
Yeah,
right?
Absolutely. Yeah. It's really important in these types of groups to have, at least a couple people that can really talk intelligently to each one of these topics that's coming up and sort of lead the discussion. But once you have those one or two people, you'll find out that there are a lot of technical people that might not be into Bitcoin today that will come and can soak that in pretty quickly and start contributing. And I've seen that happen in Austin. It's kind of exploded. I think, Justin wouldn't mind me saying the first BitDevs was, it was kind of bleak. It was, 3 or 4 people. We were in the library. We were kind of fumbling our way through it. And now it is, it's a force. There's new people showing up every single month. It's well organized. The topics are great. We have a lot of expertise in the room. It's not just one person that has to drive it. And it's one of those things that I hope gets replicated in other places, and I'm pretty sure will. I mean, it happened here. It can happen anywhere.
Right. Yeah. And so let's talk a bit about then the different structure. So you might have maybe one meetup that's more of a technical focus, and then maybe one that's a little bit more softer, right? So what's your experience? What has your experience been like there?
What I like about the way Austin's set up right now is we have different venues for, we keep our venues very segregated in the sense that like there's a technical venue, there are venues for more newcomers and more basic things. There are venues for friendship and, building relationships and things like that. And I think that it's nice to be able to go to one venue and not have to have that discussion of what is a UTXO for the 900th time, right? But then also go and give your expertise to those more beginner places. Having the more advanced venues, at least for me, has been helpful in making this my career. Where I'd previously been working at Stack Overflow. I love the place. It's a great product. I felt, like I was contributing a lot to the world there. But as I got deeper and I was exposed to more of the advanced topics in Bitcoin, the advanced engineering that was happening around the space, it gave me more and more interest of actually making this my career instead of just a side thing or as an investor.
Yeah, let's go into that. So you were a VP at Stack Overflow, right? You were in a senior role there, and obviously you had this passion for Bitcoin, and you had to make that decision, right? And I think many people do I try to work in Bitcoin or do I just basically mine as much fiat as I can and convert it into Bitcoin, right? What was your thought process there?
Yeah, I had that thought process all the way back that I remember in 2012 when I first started at Stack Overflow was that, do I want to take the entrepreneurial route with Bitcoin and start a company? Exchanges were popping up all over the place. I could start one. I know how to, do this stuff. Or I could just earn dollars and turn that into Bitcoin. I think the Winklevoss twins had a good quote on this, which was they went through a similar thing is like, do we invest in Bitcoin companies or do we invest in Bitcoin? And they kind of just, split it and said, we'll do both. We'll take half our money, buy Bitcoin, take half our money, give it to Bitcoin companies and invest in them. I took the approach at the time where I wasn't really sure what Bitcoin entrepreneurship looked like. I knew that the on-ramp was important, that getting people Bitcoin was important. I didn't think I was uniquely qualified to provide that service in any way. And after that, I thought, well, there is no other product. It's just Bitcoin. It's a protocol unless I'm working on the protocol. And I did make some overtures to try to figure out how does, someone with my skill set contribute to the Bitcoin core process. I had talked to Steve Lee and John Newberry and some people over the time. I was kind of kidding myself. There wasn't much I could do there. And also I didn't have the time. I had a full-time job and, it was very demanding. So for me, it was, earn fiat, buy Bitcoin, get involved in it as much as I can. I did find one outlet before I left Stack Overflow and joined Unchained, which was going to Wyoming and being involved in the blockchain task force, working on passing legislation that would, essentially create the most competitive jurisdiction for companies that were dealing with Bitcoin and having trouble maybe with the, banking, the U.S. banking system or something like that. So I had found some avenues for it, but very quickly, Parker got me back, which was, I helped him out at the very beginning, but he fast forwarded and figured out what Bitcoin entrepreneurship looked like. He had met Joe and Drew here at Unchained, the two founders of Unchained Capital. And just like, one day my explanations of Bitcoin clicked for Parker, it kind of clicked for me that if Bitcoin is money, what is the product of money? And that's financial services. Is that, I could go up on a whiteboard and say, here's a bank in the fiat world, and here's Bitcoin. What services that banks provide does Bitcoin negate? And it does a few. It certainly negates several business models like the rehypothecation. Everything's built off of that. But the services themselves, a lot of them are still going to be needed. And I looked at that and it just clicked for me. It's like, financial services. This is where entrepreneurship and Bitcoin sort of collide and where I do have some abilities where I can contribute back to the ecosystem. So that was kind of what clicked for me there.
When people first come into Bitcoin, sometimes they get it twisted a little bit. They think, Bitcoin is anti-banking, whereas I think it's more correct to say Bitcoin is anti-central banking. What's your view there?
I couldn't have said it better myself, right? Is that, I think it's Pomp's, tagline, long Bitcoin, short the bankers. Yeah. I get the ethos of it and it's funny, but really, Bitcoin replaces a bank. The central bank, or many central banks around the world, the issuance of currency, the monetary policy, all banking is still going to exist in some form for institutions, even for individuals. I do think that now that doesn't mean it will look the same. There are a lot of things that banks do today that they can't do with Bitcoin, or that if you wanted to be successful as a bank in Bitcoin, that you would necessarily want to build more Bitcoin native solutions to things that look the things that look like they do in the fiat world. And to that matter, a good example of that would be one of the things that we do at Unchained is you give us Bitcoin as collateral and we give you dollars, right? And one of the cool things is that when you take in Bitcoin as collateral, there's a lot of different ways you could do it. If you wanted to mimic the fiat world, you would take that Bitcoin as collateral and you'd start lending it out to try to create interest on top of it. Or if you did it in a Bitcoin native way, one of the things that you could do is allow the person giving you collateral to share in the quorum of keys. Now, they can't have control. It is collateral, so it's not your keys anymore, but you can have a key so you can see, proof of reserves. You can actually do that with Bitcoin, where it's harder to do in a fiat world. Proof of reserves on chain, you can see that we're not doing any funny business with your money. And that's a really interesting relationship to have with your client, where you can do that with Bitcoin, where you couldn't do it in the fiat world. And where I think that clients are going to demand your sort of posture, your financial services posture towards them, your relationship with them, is going to have to be different. And so everything, I think about now with the Bitcoin entrepreneurship and the types of products that you build here is how do you do it in a Bitcoin native way? Because if you could do the same thing with fiat, I'm not that interested. I want to do it in the way that where Bitcoin's unique.
Right. And it's not just numbers on a screen, right? Because with gold, whereas many libertarian people, like even maybe someone like Peter Schiff might say, yeah, go buy gold and just trust the gold vault, right? That they've allocated it for you, right?
Yeah.
And maybe there are some ways to, okay, you might have a third party auditor, whatever, but it might not be the same thing. It's just not the same when you hold one of the keys. And that's one thing I actually quite like about Unchained, just that it's respecting the ethos of Bitcoin, that you are still participating, even if you're not the majority in that quorum, right? So in this example, let's say I'm the customer, I'm putting some Bitcoin up with you, I still hold one of those keys, and then the other two keys are held by, one by Unchained, one by the third party agent. And so that's kind of respecting the ethos of Bitcoin. And I think there will be some strong benefits for customers in this Bitcoin collateral world.
Yeah, absolutely. Yeah, and Bitcoin makes great collateral, right? It's a good financial service for the holders of Bitcoin who, it could be any reason, right? You could be Bitcoin rich and cash poor. You could have debt denominated in dollars that you want to take care of. You could want to buy more Bitcoin. There are lots of reasons to want to do this, but Bitcoin makes really good collateral. We enter into a relationship with our client that is unlike most banking relationships, where they get to where we have greater accountability towards them, right? And they get more information about our relationship because we've built this in a very specific way, where they get to look at the address, see if the Bitcoin's moving, see if it's being rehypothecated. Not that like all rehypothecation, of all time will be necessarily a terrible thing, but at least right now I don't know how to do it well. And that this is the type of relationship that I really value with our customers. It puts them in the driver's seat of understanding what is happening with their asset.
Yeah, right. And I think I like this theme of Bitcoin as collateral. Other people have spoken about it. Guys like Tua Demista has spoken about it. Trace Mayer has spoken about it. One thing that we could try to... This is a new thing that we're dealing with, right? And if we believe that Bitcoin is like an allodial money, it's like a claim on which nobody else can override that. Mm-hmm. There's a case that Bitcoin will be the best collateral, and in that world, maybe from a credit perspective, the people will prefer to hold Bitcoin as collateral, and because of that, all other things considered, they might charge a lower interest rate potentially. What's your view there, like longer term?
Well, I think eventually that's true. Right now, it might not be true, but we're still in the early days. Is that eventually? Yeah, I mean, I think of it in terms of liquidity. Is that Bitcoin? It is liquid. Your house as collateral isn't necessarily a very liquid asset. You see this in foreclosures and the inability to sell or recoup your investment by foreclosing on a house. I have friends that work in commercial real estate or industrial real estate, which right now in the United States is very, very hot. But in an economic downturn, you own a building in a desert in New Mexico. Like, shoot, that's not very liquid in that case, but Bitcoin is. And I think that it has those properties that make it fantastic collateral. And because of its liquidity, it's going to be something that institutions are more and more comfortable with holding on their balance sheet or otherwise. Yeah.
It is on some part speculative in that we believe in the future. We believe it's going to be moving on that pathway to being global money and the best collateral. And then if you believe that, well, then that's the natural corollary. Is it becomes it becomes the more demanded thing. And as opposed to, let's say, we've been through a big speculative bubble in, let's say, .com or housing, then at the precise time that all the banks are trying to get to sell the underlying sell that collateral to make themselves whole is often the worst time for that asset because everyone's trying to sell at the same time.
Yeah.
Right.
Yeah.
But in a ideal world there where if people are moving towards Bitcoin, then that's a different story because it's just money.
Certainly. Yeah. And, right now, you could say that like Bitcoin is, volatile to the extent where it's not the best collateral, like literally today. But yeah, I mean, if we're right, then we're not that far from Bitcoin's volatility smoothing out over time. It starts to get those properties of the best collateral that you could hope for. Yeah.
Right. Yeah. And so let's talk a bit about the Unchained offering then. So obviously, I'm the sponsor of the pod. I advertise for you guys.
Yeah.
But let's talk about the Vault model and kind of what the interface of that looks like, so that people get a feel of what does that look like compared to like a normal banking thing that they would use.
Oh yeah, it's so different. And I guess I'll start with this, which is the way Unchained is set up right now is at the heart of it is multi-sig, native Bitcoin multi-sig. And we employ something that we're calling collaborative custody in order to define the sharing of keys in a multi-sig quorum. And what makes it so special is that, right now, today, some people might have a couple $100s worth of Bitcoin. They're fine storing that in a custodial sense on Coinbase or Gemini or Zappo or Anchorage or something like that. Or they have a Trezor single sig hardware device. But as many people have gone through in the past, those low holdings turn into big holdings eventually. And what is the next logical step for people to take when all of a sudden their couple $100 are thousands of dollars, or where their thousands of dollars are hundreds of thousands of dollars, or hundreds of thousands, millions, and so on. And I firmly believe that multisig is that path forward. And the way that we're doing it right now is when you become an Unchained customer, a Vault customer with us, is we do 2 of 3 multisig. You have 2 different options. One option is a sort of self-sovereign option where you hold 2 keys and we hold 1 as a backup or as a cosigner. And in this scenario, you're completely sovereign. What you're giving up is that we know the balance of your vault. However, we can't move funds unilaterally. We only have 1 key and a 2 of 3 multisig. You have both other keys, so you can move, spend, do whatever you want there. However, you might want to use that in a different way. You might want to assign yourself every time, keep both of your keys, geographically near each other so that you can do transactions daily, weekly, monthly, or you could put 1 key in deep storage and use us as a cosigner whenever you want to do a transaction. If you lose one of your keys, you can get us to co-sign, sweep your funds, create a new vault with a new 203 quorum. So there's some redundancy there. There's some services that come with that as well, with us as a co-signer. And it is in my view, a much safer way to store, especially large quantities of Bitcoin than, say, in a fully custodied manner or in a single sig situation. I would elaborate on this to say, there's a lot of, it just depends on how much you have and how many secure physical locations you have access to. There are a lot of different ways to do this, but the best case scenario I can think of is if you're doing the self-sovereign option and you have 2 keys and we have 1, that you would have 4 secure locations, 1 for each of your hardware devices, 1 for each of the backups. We would, be another backup or co-signer for you, and you would be in a much, much safer position for a lot of the attack vectors, whether that's plunder. If someone steals 1 key of yours or gets access to 1 key of yours, they can't move funds. We have time to recover and move it into another safer quorum. For loss, we're always there to back up. For advice that you would like from experts at our company, or for co-signing, where you want to keep something in deep cold storage and just have one of your devices ready to sign. I think that's a really attractive thing. It attracted me to this company. And the other thing I'd like to explain about our system is that we also want to make sure that you're successful and sovereign without us. So we've spent a lot of time investing in open source. We built a product called Caravan that allows you to do spins outside of our system. So for any reason, maybe you don't have access to our website, maybe we're down, for whatever reason we're not available, you could always take your information, your keys, go to something like Caravan. You can also use Electrum or something like that, but we wanted to contribute to that space and built Caravan specifically for this, so you can spend outside of our ecosystem.
And so in practice, that will look like, I guess, just walking that through for just an individual.
Mm-hmm.
They'll have their 2 hardware wallets, and they might have like a crypto steel or a Billfodl or a cipher wheel or one of those kinds of metal backups, right?
Yeah.
And so they might do 1 Trezor, 1 Ledger, and those steel backup type devices, right? And they could keep maybe 1 device at home,
mm-hmm.
but then keep the other device in like a safe or in a vault somewhere,
mm-hmm.
and then the metal backups can be kept in again different vaults
places,
and different safety deposit boxes wherever you would like, or maybe you'd keep one with a family member or something like
mm-hmm.
that. And then that's kind of their model, and then their day-to-day operation is logging in on the Unchained site, and then they can choose to withdraw, have a new address to receive to,
mm-hmm.
and so on, or if you're spending out of it. Although obviously this is to do more with your kind of long-term holding stack. So you theoretically aren't doing too many transactions, but it's more of this is how you can monitor and manage your kind of long-term holding for in a more secure way. And I think the other point that you were touching on is interesting as well. Is look, right now as we record this today, the price is what, $9,000 USD, something like that, roughly. If let's say we hit another bull run, we don't know, it could 5 times, it could 10 times. How should people think through their security as that occurs? Yeah,
I mean, it hits you like a ton of bricks, right? All of a sudden what you're holding on to is hey, plan B, 100 trillion, $100,000 Bitcoin is a very, very different world that we're living in, and everyone's security posture that they have to second guess what they're doing, whether that's that they're on a fully custodied model, with Coinbase, or they have a single sig Trezor or something like that. You have to start thinking, am I doing as much as I can to secure what is now an incredibly, an incredible amount of money and value. And I think that that when that hits people, like what I want them to at least know is an option for them is that multi-sig is something that is battle tested. It is something that has good thought and reasoning behind it, why you can why you will be in a safer position, but also why you don't have to give up some of the Bitcoin native sort of things that make it great. not your keys, not your Bitcoin. Multi-sig, you can still hold the keys. It's still possible to do. It's not very hard, right? Instead of one Trezor, you have two, right? It's something that I think would make people sleep better at night, knowing that their Bitcoin is safe. And I want to build products that make it easier for people to do that. And I firmly believe that whether we see a huge bull run now or later, that people should be considering what they'll do when they reach certain thresholds where they are no longer comfortable having third parties custody their Bitcoin, or where they're no longer comfortable having it just one hardware device in a safe in their house or something like that, right? And we want to help those individuals, those institutions that are going to, I think, inevitably run into this problem.
And I think another key benefit that I see from the Unchained suite is the collateralized loan option and the tax benefit. I think there's a big benefit there because many countries have capital gains tax laws, meaning when you sell, you must incur that gain and pay tax on that.
Mm-hmm.
And so this model of using a collateralized loan, now, yes, you're paying interest, and there are certain conditions on that, but can you elaborate a little bit on what that process looks like and, what are some of the benefits there?
Oh yeah, we've got it down here. It's really simple, actually, right? If you're looking to get dollars for any reason, we lend out dollars, US dollars. We basically do a 2-to-1 collateral to dollars issued. So if you give us, if it's $9,000 right now and you gave us 10 Bitcoin, we could loan you up to $45,000, give or take a little bit. For that type of loan, what would happen is you would send a transfer to us. We would store it in a multi-sig, multi-institution environment where you have a key, we have a key, and a third-party institution has a key that we talked to you about. And then, there's an interest rate where you're paying your interest in fiat to us. That we have contract between us where at certain levels of collateral to loan value, there are margin calls and things like that. But if it's staying steady, there are no margin calls. If it's going up, you can take out some of your over collateralized deposits. And it's a really good way for a lot of people to get fiat liquidity without those tax repercussions. It's one of our biggest businesses right now. It's actually the foundation of Unchained. And one of the things that really attracted me to Unchained was when I found out how they built that, right? They didn't do loans where you just send it to us and we took full custody over it, and it was just us or just Unchained that had access to that. They did it in multi-sig. They did it with third parties involved. They did it where the person taking out the loan could continue to monitor that address and their funds. I looked at that and thought, these guys get it. Drew and Joe, who started this business and where the loans were the first product, it was really impressive to me. And it was also because they did it the right way, in my mind, in the Bitcoin native way. We were able to, branch out into the Vaults project pretty naturally, right? The loans are a vault with a different quorum of key holders and then contracts between us because of the nature of lending out the dollars. But when you go into the vault, it's the same thing, right? It's who has the keys, who has the majority control of the keys, or does anyone have the majority control of the keys? Because they did it the right way, we were able to expand into other services for people really naturally. That was a huge turn on for me to see that someone was doing this in a way that really connected to me as a longtime Bitcoin holder that really cared that someone was doing this in a way that didn't mimic the banking system that we have now, but really respected what the Bitcoin holder would want out of a financial services company.
I'm a big believer in that approach as well. Let's talk a little bit about one thing I find interesting is big Bitcoin holders might not actually have to sell their Bitcoin, right? They can literally just borrow against it. And let's say they've got a profitable business idea, right? And so you could borrow against your Bitcoin, use, generate a return out of that business, use that to pay off the interest. And then basically in doing so, not actually sell your Bitcoin, but still get some of the benefit out of having that Bitcoin, right? And it's just it's a huge it's just a big benefit to that holder, right?
Absolutely. And, we have this little tagline that's on some of our t-shirts that friends don't let friends sell Bitcoin, right? And while that's a little bit silly and everything, I want to build services where you don't have to sell your Bitcoin. I mean, that's a big step to take. And if we can avoid that and we can help people avoid that anyway, I want to be able to do that. And, it could be investing into a new company. It could be paying down other, debts that you have. It could be buying more, the reason, there are going to be many, many reasons to do that. But if you're Bitcoin rich and cash poor for any reason at any point in time, that's a really good option to have, to not have to forfeit, permanently your ownership of that Bitcoin.
Look, let's bring it down. You mentioned ownership of your Bitcoin, and I think that is really what people come to Bitcoin for. It's ownership, right? It's a allodial title, as we were referring to before. Now, I want to touch on what you were talking about earlier with Wyoming and having certainty over our ownership and our property right. So give us a bit of a background. What were you doing at Wyoming and the blockchain task force?
Yeah, that was a really interesting time. I joined in 2019. It had existed before 2018. So as I talk about this, I want everyone to know that all credit goes to Caitlin Long and Tyler Lindholm and the other legislators there. Tyler kind of had the vision for what they wanted to do in Wyoming, and Caitlin really helped with the execution and a lot of the expertise in Bitcoin to make it happen. I was kind of a late joiner to that, but hopefully contributed. But what they did was phenomenal. I actually went in as a skeptic, thinking that I had seen a bill that they had passed and gotten a little bit prickly about it, just thinking like, oh no, this isn't how it's supposed to work. And I wrote a letter to the Secretary of State and said, there's no way you can comply with this bill. And then, one thing led to another, and they actually named me to the task force. And I got there and I realized, oh shit, foot in mouth, these guys are doing phenomenal stuff. And they rewrote that bill that I got all prickly about, and it was fine. And what I learned there was that they had a certain mission, which was to help the economic growth in Wyoming, to make it a attractive jurisdiction for companies to start their business in, and they were going to focus on this Bitcoin blockchain world in order to attract a growing industry. And I think they've been very successful to date. They've set the groundwork for this, and my contributions were really bringing in some of my expertise and knowledge just over years of being involved in Bitcoin, and also making sure that while we weren't looking for regulatory capture in any way, making sure that we weren't doing anything that I thought could harm Bitcoin and the growth of the industry in any way, and it was kind of amazing. I give so much credit to the legislators in the state there. I mean, what they are doing is they are selling sovereignty. They're trying to create this environment that outcompetes every other jurisdiction, that says, if you're uncertain in the state of New York, if you're uncertain in Switzerland or in the UK, there's a place for you here. And we did some really cool things. I think, just to pick on probably the most prominent one, the passage of the SPDI bill, the Special Purpose Depository Institution, which we all know, watching this space for a long time, that a lot of Bitcoin companies have difficulty dealing with the fiat world, with the banking system. They get cut off from banks. Their customers go through all sorts of hoops or lose access to their banking relationships. Not just the company loses access, but individuals that use some Bitcoin companies would lose their relationship with their bank. It was kind of nasty out there for a while. And the SPDI bill gives companies, Bitcoin companies, kind of a seat at the table. Because what a special purpose depository institution is, and this is fucking huge, it's huge, is that essentially you are a bank. You can get membership into the Federal Reserve group of banks, and there are a hell of a lot of privileges that come with being a bank. Now, they are non-lending institutions, right? So they are not under the jurisdiction of the FDIC, for instance. So it's not FDIC insured and stuff like that. But everything else, besides the lending part, you are a bank. And banks work with other banks. And they don't really question each other very much. And that gives, whether you're a custodian or a payment processor or an exchange, there are a lot of reasons why that type of corporate formation would be hugely advantageous next to being a different type of corporation in a jurisdiction where you didn't know, or you don't know if next year they're going to say, hey, what you're doing is illegal and we're going to cut you off. Wyoming's sort of taking the stance of saying, we are going to write these laws with the input of the Bitcoin and community, in which I was really impressed with. I don't know how government works for the most part. And I watched this happen. We sit up there and I thought we were just going to debate amongst each other, what type of bills we want to write. But no, it's a table, you're looking out and we have an agenda and the public just comes up and testifies and says, this is what we would like. This would make us move here. This would make us certain that we can build our business in the way that we want to. And then we consider it and we draft legislation, and then they get to talk about, and then we show the public the legislation. They say, you got this part wrong, right? This is going to be a little bit onerous for us, or and then we change it, and then they say, great, and we put it up for a vote. And I've been really impressed with the way Wyoming worked through this process. I think they've had a lot of success, and with SPDIs, I know that the applications for that type of formation are rolling in now, and that's really impressive. And it was fun to be a part of that.
Right. Yeah. And so, have you winded down your involvement now, or are you still involved?
So it's a little bit up in the air, but my understanding of this is that they've gotten a little bit too big for me and citizens to be involved. So a task force is a little bit different. They can't sponsor their own bills. They'd have to we'd write legislation and then send it off to another committee that would then, I know it's all crazy government stuff, but it's the way it worked. It's been so successful that they've gotten, I believe, their own committee now, which can sponsor their own legislation, which means that they can't have citizens on it. I'll still be going up to testify and be a part of the public commentary on it. We had a great group of people up there, great Bitcoin companies. People like Trace Mayer were up there. Kraken was up there a lot. There were just all sorts of people involved, helping inform the process. We even took to Twitter. I remember one time when we were working on the custody aspects of one of the bills, the Twitter world and Adam Back and people got involved saying, like, if you write the law this way, then there's an attack vector on custodians, where I believe the way it was written was that by law you were going to have to give access to all forks, within a certain amount of time. And then there was a bunch of Twitter uproar, and to the legislators' credit and Caitlin's credit, they took that feedback, they rewrote the bill, and within a few months, they had a new bill out there, and it was fixed. It was great.
Right. Well, there you go. So, look, I think the broader lesson and hope there is that we see that, and as has been a theme on the podcast, is that competitive jurisdiction aspect. Where, some other jurisdiction sees, okay, that's working out really well for them. We're going to try that as well.
Yeah, and I want to talk to one thing, because you'd opened this up and I kind of missed this point of we're talking about ownership and the not your keys, not your Bitcoin, that relates to Unchained and what we do. But in Wyoming, one of the bills that's actually up for a vote this month is around whether or not a court can compel you to disclose a private key. And our bill proposes that a court should not be able to compel you to disclose a private key. And that has a lot of implications that are really important. I remember Christopher Allen actually helped us a lot in drafting this legislation. And the reason that that's so important is that a private key could be holding a lot more than just Bitcoin, right? It could be holding more Bitcoin than someone needs access to, and the disclosure of that private key could be devastating, for especially if an institution was forced to disclose it. Now, it's not an excuse to not let people have, if you're going through a divorce and you're just not trying to pay up your fair share, it's not to say that there's not still a claim on assets that private key is protecting, and that the court would have, reason to demand those assets. But, even in that case, someone could just refuse to show their private key and then be held in contempt. The idea is that there is a process now on the books, or at least proposed, that there would be a different way to go through getting those assets than disclosure of a private key. That's a really interesting and I think unique proposal that Wyoming's taking on that I haven't seen anywhere else, and really does speak to, it speaks to, I think a lot of people that hold Bitcoin and understand cryptography, but I also think that it speaks to the extent that Wyoming's willing to understand what will be attractive to institutions and individuals in the space.
I think it's one of those things where it may be like a story where we see some other country around the world want to also replicate that model and say, okay, well, look, it worked out for them. We should do that too. And then we can have real competition between the states of the world at least on a way that is better for us as individuals.
Oh, yeah.
As opposed to competing in the production of bads as they do right now.
And we see it happening already, right? And I'm glad that Wyoming is kicking everyone else's ass right now, because that's part of our goal as the task force, was to give us a head start. But we're not stupid. We've done some really good work, and people are going to copy us, and it's happening. We hear from other states, we hear from other countries. We had the task force was always receiving these letters from it could be Bermuda, or it could be Nevada, or it could be Alaska, and a lot of the stuff already has been copied. I think that it's going to take a while. I think Wyoming was really aggressive here, and so for any jurisdiction to catch up, they're going to have to do a lot of work, but we've seen bits and pieces of it already seeping into other places. And yeah, there's going to be a lot of competition, but I'll put my money on Wyoming to outflank them once again once they've caught up to this point.
Right.
I don't think they're stopping. If you knew Tyler Lindholm, you know that they're not done yet.
And I think the other thing that comes to my mind is when we get more Bitcoin holders, we're going to have a bigger voting base, if you will.
Oh, yeah.
And so there's going to be more people out there basically pushing their local representative, pushing their local politician, whatever country they're in, to have more Bitcoin favorable laws. What's your view?
Yeah, I want to take a roundabout way at this, which is, I want to fully recognize that, Bitcoin at its core is censorship resistance. It doesn't need what Wyoming is doing. It doesn't need what any of these jurisdictions are doing. It doesn't make it. That doesn't mean, I respect that fact. It doesn't mean we shouldn't try to make it easier and more friendly. It's better for all of us, right? And yeah, I think that's a big part of this, is that, as places like Wyoming, God, it's such a big deal. It's a sovereign state, and it's taking this very seriously, and it's taking a very, I would say, it's not even non-antagonistic. It's welcoming and opening up the doors to this industry in a way that, if they're successful and the companies and the individuals are, moving there, of course people are gonna try to compete, and that benefits all of us. And it's fun to be a part of that. And I think that even though we know that Bitcoin doesn't need it, it's good to know that there are people out there like Tyler, like Caitlin, and like the Wyoming legislature that are out there fighting that fight, because it makes our lives a lot better.
Yeah. And look, one other topic I think would be interesting and it's kind of related. So right now there's a big debate around, Bitcoin privacy and so on, right? And should people use coin joining and so on? And obviously that's a whole debate. We don't need to get into that today. Yeah. But I think there might be some benefit just to consider, and this is going to sound silly, but just number go up, right? Like just the sheer number go up, even if we don't have privacy, just sheer number go up. I think that drives a big change in the way the government's work and law works, and just there will be so many more people who go and lobby their government and try and make sure that their government doesn't make Bitcoin illegal and so on, and self-custody illegal.
Oh, absolutely. Yeah. As number goes up, and as it does help that we have lots of prominent people that are connected to the government that actually hold Bitcoin. These things matter in human societies that have influence on how these things go. But not that we didn't want to get into coin joins. I think that stuff's inevitable anyway. We're not going to lose the privacy wars and stuff like that. Bitcoin will be fine there, and there's lots of great plans, and the after Taproot and Schnorr. There's the the extensions to SegWit and stuff. We're going to get some cool stuff there. So I'm not willing to throw in the towel and say Bitcoin will never have any privacy. Although I think you're right that it doesn't necessarily need to be that in order to succeed. But yeah, number go up. That was one of the things that I only half jokingly was thinking about when as part of the Wyoming task force was, if the goal is to diversify the economy of Wyoming and be attractive to all these new companies and make Wyoming, why doesn't the treasurer's office just buy Bitcoin? Right. And can we write a law like that? I'm so naive on this stuff. And I talked around with a few people and was like, no, we can't really force them to do that. But, it is something that I've been talking actually, but now I'm serious. I've been talking to people that do have some influence in Wyoming about who's the first sovereign to take a public position there and say, we're going to hold Bitcoin on our balance sheet, number go up. This is important to our future. It's going to happen. It's going to happen soon.
Right. Yeah.
If it hasn't already, maybe it's happened in some country that I'm ignorant of. But I think Wyoming could win that battle as well.
Right. Yeah. So I think you hear whispers about these things, and you never really know, right? I saw some random article, but who knows, right? But I think it just comes back to me that that we're just over this next few years, we're just going to see a massive sucking in of people and talent and money, and everything's just going to come into this, because it just if you're listening to this now in we're recording this in January 2020, you might be listening in February 2020, you're early, right?
Oh yeah.
So it's just so hard for us to explain that, and there will be so many more people to get sucked into this industry and start working in it and owning Bitcoin. And for you as well. You had a great job in Stack Overflow, but you chose to leave to come to a Bitcoin company.
Yeah.
What's your take on seeing brain drain in the direction of Bitcoin companies?
I've been amazed by it. The more and more I've either through Wyoming or being a part of Unchained now and seeing the level of talent that's here at this company, technical talent, business development, client services. There were some really great people moving into this space. And, I knew that on the protocol level, for a long time. I could see the level of talent there, but in the industry now, I think it's become so much more mature. There aren't a lot of Mt. Gox, shops being built anymore. They can't compete. Bitcoin's more serious. And while, everyone listening here, you are still early, there's a lot that's been de-risked for you, over the last decade, right? The types of services you have access to, whether Unchained or otherwise, are immensely better than what we had access to in 2012, right? Especially around security. What I've noticed is that when you put out a job listing, for a company like Unchained, is that the flood of talent from sort of traditional tech or traditional finance that will do just about anything to come work with a Bitcoin company because it's so much more fun, more interesting, and the promise is so much greater than what they're doing right now, especially on the banking side. Gosh, how depressing is that right now? Right now we kind of get our pick of the litter. It's really impressive. I've never seen anything quite like it.
Yeah, it really feels like this is just a new frontier, and if you wanna have a chance at big success and prosperity, then you want to come to the frontier and be here and be knowledgeable about it and be in this space.
Yeah.
So look, I think that's about all time we've got the time for. But did you want to just make sure you let the listeners know where to find you online and where they can find Unchained Capital?
Oh yeah, you can find me at Will Cole on Twitter. That's probably the best place. No use going anywhere else. Twitter's the greatest online product ever created. It is so great, and that's where I spend my time. And then Unchained Capital is unchained-capital.com. You can find us there. If you're wondering about multi-sig, we have a lot of good educational information there. If you're wanting to go down the Bitcoin rabbit hole from first principles, check out Parker Lewis's Gradually Then Suddenly series. It's fantastic. And yeah.
Well, thanks for joining me.
Yeah, thank you, Stefan.
Hope you enjoyed that one. I've also got another interview coming soon that I recorded with Pierre Richard and Safedine. So Make sure you subscribe to the Stefan Livera podcast. You can go to stefanlivera.com and find the show notes and the transcript. Otherwise, that's it from me. Thanks for listening, and I'll see you in the Citadels.